Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Sunday, March 16th, 2025. Happy St. Patrick's Day to everybody out there. And hopefully we're going to be able to weather this storm that's coming through here. It's supposed to be pretty bad. So anyway, I've been warning for, the past few days that just going blindly short, it's a dangerous trade. And really the main reason was that trade was just overcrowded. And you can tell that from the way just, the VIX was, all the information that's been coming out of the talking heads, and we're going into a recession, or, the tariffs are doing this. And, when everybody's just looking one way, and it's the exact same thing when the market is going up and everybody's just looking up, and when it's, everybody's just looking down, you got to anticipate that we're going to have a, some type of big face ripping, short covering squeeze. And, Friday was definitely the strongest day that we've seen the bulls put in quite some time. And they're taking out this resistance right here. So what this basically is going to look like is this is a false breakdown, meaning we took these lows out and then we came back up and took these highs out. What that does, that this right here will force out all the weak hands of the bulls here. So they're washed out here. Now I believe they're in the spot where if the bulls want, it's definitely been a little bit dicey lately, but if they want, I believe they're going to be, heading up. Really, this is my first target zone, and it's going to be the 57.37, and that goes up to the 57.76. So this is the first zone. If they get above it, obviously we have some resistance right here. That's at 58.44. But then really the next zone, though, is between the 58.70 and the 59.14. We had the bullish divergences. This is what I was looking for here, where I said I have to leave the door open that we're going to make another new low, because we didn't have those buy signals here. So we got them, and here we go. We're out there. We're got a good run on Friday. If the bulls are going to be back, say, to their old tricks, then they should gap this market up tomorrow too, and we should see it trading somewhere near this resistance area in probably a fairly short time period. So maybe Tuesday, Wednesday, we're going to start seeing testing these levels. But again, if we, the futures open up and we're down 80 points, then obviously this roadmap is, it's not going to work, and we just have to wait, for a better low to be hit. But I'm really, this is more of a time thing, and why I think that, they could carry this out, to the end of the week on it, and it would make sense. And that's pretty much the way that they, they really force the herd into a position that they're taking the exact opposite to. So these are the resistance lines. Now let's take a look at the daily chart here, because if these, let's say we get up to these levels and it goes into next week, I'm still on the side that these are not going to be the lows. So depending on where we go and how high we go is going to give us some pretty good information as far as where we're going to go on the downside. Now, obviously, this is really the first support line. That is right around the 54.04. That's if these lows are taken out. And if this is taken out, then, really we have some support right here. That's at the 52.67. And then really the major support doesn't come all the way till we're at 51.22. So these would actually be the longer term downside targets. But you can see we're just getting, popping up from the very oversold levels. This is another reason why I don't believe that the lows are in, is we don't have any buy signals yet. So what's going to happen is we're going to need time where, we can go up, pull back, go up, but it's going to take, just some time to move our momentum up. So then when we come down and take these lows out again, you are going to have buy signals on the daily charts. And from there, like I said, a lot of people are, calling for a recession, the start of a new bear market. We're heading just down. And I really do not believe that is what the case is right now. I think that yes, we're going to have a little bit of pain from the economy, and that's really just the cleanup that's being done. And it's a mess that our entire government and how it's run. It needs a complete just makeover, and that's what they're doing. But it's going to take its toll on on GDP and probably on unemployment, because they're going to be letting go all the fat that we have. Having 35 people make a decision on buying one car, so that's going to be out. So we're going to have a little bit of pain, but I do believe that we're going to see the S&P back up at these levels, and I wouldn't be surprised to see it by fall. So in the next 2 to 3 weeks, maybe a month, I'm going to be looking for that the low that we're going to be able to hold on to long positions, and that's just let it go and ride it up. Well, obviously I'll be trading on a daily basis, but the bias would be to the upside. So obviously this is some resistance right here. This is the moving average at 57.04. So there could be sellers waiting there, because this is also resistance right here too. So we want to keep an eye on, really let's do this. So I'm going to duplicate it, and we're going to go from here because it's going to. You can see it's this right here. We have some resistance right here. We have resistance right here, and we have resistance here on top of the moving average. So this is the area, the first area that we really, really have to keep an eye on. If they break through it, then I believe we're going to be trading up at the 57.73 in a fairly short manner. If they get above that, then we're probably coming up and we're going to test the 200-day moving average, and that's all the way up at the 58.85. So that's that. Let's take a look at some other ones. Here's just some resistance right here. This is the 15-minute chart. You can see we have the moving average as well as a pivot, as well as a gamma line. So this is what the 56.50 area. This is what the bulls have to get over. If they do, the next resistance is going to be at the 56.74, and then up at the next gamma line, as well as the pivot up at the 57.01. I'm on the side that this gap will get closed before we start the next move down, and that's suggesting that we could see a move all the way up to the 57.50. But we also have an open gap here all the way up at the 58.40. So these are really my upside targets. I just want to see how the bulls react, because like I said, they've been kind of weak. Here you can see we do have some bearish divergences lining up. So that's suggesting that if we get a move up, anticipate that we're going to come doing some backing and filling, or go a little bit deeper and possibly close. I don't think they're going to close this gap, because if they close this, then we're probably just taking out the lows. But I want to see how the support holds. If we see the buyers step in, then we just keep an eye on the upside numbers on it. So we had a very good day on Friday. 45.90 was the total. It was a fairly easy day. I was telling the room that I thought it was going to be a gap and go, and that's pretty much what happened. So the bulls right now, if they want, they can take control of their destiny right here and really start squeezing the bears. Let's just see how the futures open tomorrow, because all that can change if the gains that we saw on Friday are all wiped out in pre-market. So have a great St. Patrick's Day. Enjoy the rest of your weekend, and I will talk to you guys in the morning.